What is going on YouTube? It's Sankey. We're back with another one. Hey, before I kick things off, if you're looking to level up as an investor, check out the link down below to the Patreon and join our team of investors over at the Discord. Alright guys, so ahead of markets opening tomorrow, I'm coming at you with a couple of penny stock plays. Now before we get the show on the road, I'm going to need you guys to hit that like button for me, and if you're new, hit that subscribe button, join the journey. Now before we jump into our first play, you guys know with these penny stock plays, we use them to have a bit of fun with the markets, blow off a bit of steam. Ideally, you don't want to be getting too attached to these penny stock plays. Use them as quick money grabs, and then you can keep it moving to the next one. Alright guys, without further ado, we're going to jump into our first one. Now our first, that's BNGO, ticker symbol BNGO. Now over the last couple of weeks, we've seen this stock price cool down from their heights of over $15 with a market correction. But I'll let you guys know there's undeniable potential with this play under the condition that they hit their business objectives going forward, and they could potentially retest that all-time high again. But you guys know with these plays, we try and position ourselves at an opportune time. We move strategically. We don't just throw cash at them at any point in time. So I want to put on your radar, next week they are coming out with their earnings on the 23rd of March. I want to make sure you guys got that date in your calendar for this play. Now, with the market correction that's going on at the moment and the volatility, even those plays are crushing their earnings, we're seeing that stock price come down. So the market is very testing on these plays, and the market is especially savage on plays like BNGO, where the expectation is very high and the valuation is high. So this is how we're going to play this one. Now on the 23rd of March, if we see average to good earnings from BNGO and that stock price cools down below $8.50, you guys, good opportunity to grab a position in this one, because what's going to happen is the investors are going to pile back in and bid that price back up. Our next, that's HITIF, ticker symbol HITIF. Now this one remains one of my favorite penny stock plays for a very good reason. Now you guys who've been rocking with the channel, this one will be no stranger to you. So this one is ticking all the boxes that we look for in investment criteria in these plays, guys. Good revenue growth potential. 2020, it was over 100%, and they're looking to do around the same for 2021. We know they've been branching out their retail stores. I tell you guys, they just opened up their 75th. So as they do that, their revenues are going to increase. Not to mention the market is large, both from the medical and recreational side. That's going to play into their favor. They've also been cleaning up their balance sheet as well, and this one remains one of the cheapest plays in the industry. Now when it comes to being an all-round play, not many penny stocks do it like HITIF do. So I want you guys to keep this one on your radar. If we look at that stock price, you can see over the last couple of weeks, guys, to the untrained eye, this one might look like a boring play, but to me, this is exciting because what I'm seeing right here is consolidation. You guys know I've taught you the chart patterns, and that consolidation, that trading in a narrow channel, it's a good sign of things to come. When you have that growth play, they've been investing heavy into their business, they're on an expansion run, and they're consolidating. It's only a matter of time before they break through their resistance and run up. So guys, as I say, this one's exciting. If you don't already have your position in this one, I like this under 60 cents. So you should be able to grab your position if you haven't already done so. And as you can see, guys, I'm holding my 1,000 shares strong in this one, return 20%. Next week, I'm looking to double my position in this play. You guys know I've got an end of year price target in this one of $1.20. This is a double up candidate we've got on our hands. Our next play, that's Drive Shack, ticker symbol DS. Now this is the golf entertainment business that I put on your radar earlier in the month. So they've got the rebound effect going on there. And so as the economies open up, I expect more demand for their outlets. Also, they're in expansion mode right now. They're going to increase their number of outlets and utilize different niches of the sport. So this play is set for good things. You guys know I'm always looking at the earnings announcement of these plays, and I encourage you guys to do the same, because what you want to ensure is that their fundamentals are in check. Now in their last earnings announcement, there were some good takeaways. They performed better than expected, and I expect much of the same moving forward. Now over the last couple of days, I've been tracking this stock price, and as you can see, they were in touching distance of that $4 mark. Now the only reason they didn't break through resistance and move into the $4 is because of the market weakness, the market volatility that we're seeing at the moment. But that's not a bad sign. That's a good sign of things to come when you have these growth plays. You guys just have to hold firm and be patient with this one. So let's talk entry on this one now. I like them closer to that $3 mark. So if you get them at $3.05, $3.10, that's a good entry point for this one, and you've got the green light to go. Now, price target on this one remains the same of $5. That's good upside on the current price. That's a good 50% increase if they hit that $5 mark. Alright guys, so those are the plays. You got the strategy, you got the entry point, you got the buy zones. Let's get ready to climb. Alright guys, let's talk about how we can level up as investors. So I want to talk to you guys about setting your exit strategies. Now this is something that's very important when you're dealing with these penny stock plays. You guys want your exit strategy planned out before you've even jumped into the play, so you're not left scrambling later down the line. Now, good exit strategy, that's going to consist of the time horizon, so your length of time that you're in the investment, your price targets, and also your stop limits, your trailing stop losses. So let's first cover off your time horizon. So the length of time that you're in the investment should be based off the future catalysts that are coming up in that stock. So if they've got a project that they're working on that's going to close next quarter, that is going to affect your time horizon. So it just sets the frame of mind of how long you should be invested into that company. Because if you don't have this built into your plan, into your investment strategy, guys, you're going to end up doing things like selling too early or selling too late out of these plays. Now, the second part to your exit strategy is your price targets. You guys know I give you the price targets on these plays on the channel. Also, don't forget we have our profit taking checkpoints. That's 25%, then we hit 50%, and then 100%. At each level, you're taking profit. And we'll talk to you guys about risk. So you guys want, when you're investing into these companies, you guys want to be analyzing how risky each investment is. What you could do is you could look at them on a scale of 1 to 10 of how risky that investment is. So if you take a BioNano, for example, that's a more risky play than a Drive Shack or a HITIF is. Now, because it's more risky, I'd suggest you guys take more profit at that first checkpoint level at 25%. So the third part to a successful exit strategy, that is setting your stop limits. You guys know I talk to you all the time about how important those stop limits are. That's because it limits your downside but gives you the maximum exposure to the upside on the play. So I'm going to give you guys a strategy. As soon as you jump into one of these penny stock plays, set your stop limit 15% below the price you bought it at. So right from the jump, this is limiting your downside. Now guys, going forward, don't forget, we adjust the stop limit. So when you're 10% in the green, at that point in time, guys, you need to adjust your stop limit. So the stop limit is just above break even, so i.e. just above your average. I'm gonna give you guys an example. So if your average entry point at the point where you're 15% in the green on a play is $15, set your stop limit at $16. Now, by having a successful exit strategy mapped out from the start, that's how we stay winning with these plays. All right, guys, we're rocking with the channel. You know what time it is. This question is, if someone has a few plays that have been consistently down for a month or more, is it worth selling out of them at a loss or to put the remaining money into other stocks showing a better potential? This is a great question, so thank you for sending it in. When it comes to the markets, guys, it all starts with understanding. That's what I always tell my guys over at the Patreon, because once you understand the situation, you're able to put the correct action into place. So I'm going to give you guys an example. Take our play Golden Nugget. Now, post that SPAC merger announcement, we saw that stock price come down. But I understood they had warrants on there that were priced cheaply. So that was causing that downwards pressure on that stock price until the expiration date had passed. And we also know Golden Nugget's got good future potential. Now, what once looked like a falling knife was actually not. That was a golden opportunity to even load up more. And that's why, guys, I put that on your radar at $13, and we've since seen that play climb up. So you guys, it all starts with understanding the situation. Now, we see a lot of plays down right now due to the market condition, and that is temporary. But some plays might be down due to the fundamentals, so you guys need to understand what's going on. So if you actually have a play that's down due to the fundamentals and not down due to the market, this is a golden opportunity for you guys to pivot into another play. So sell out of that play, take a loss, write off on the taxes, and jump into another play that's undervalued that has very good growth potential. Guys, the opportunity to pivot into plays isn't going to last long, so now's the time to do so. Alright guys, that wraps things up. Do hit the like button for me, it helps the channel out. And if you're new, hit that subscribe button, join the journey. Also check out link down below to the Patreon, where you can get access to our Discord and join our team of investors over there. Now, ahead of tomorrow's opening bell in the markets, one last thing to say, let's go!